It's Mike Lynch at Cross Country Mortgage. It's Monday morning, and this is your Monday morning update for the week of October the 27th. Talk about what happened last week, what's going to happen this week. I always try to give you perspective on things that you can use when you're buying, selling a house, going out there and helping your clients buy and sell a house. So let's talk about what happened last week. Nothing. This is the same message as far as interest rates go for the last few weeks. Let's look at the trading of mortgage-backed security charts. And really, since the pandemic, since the government shutdown, not the pandemic, since the government shutdown started, we're in the 28th day, I think. Let me look at my notes here. Yeah, the 27th day. We're on track to be in the longest government shutdown in U.S. history. We've just seen rates, the market slowly come up a little bit. And when we see this slightly upward trend, as you know, it means money's flowing into the bond market. And this is good for mortgage rates. So we've seen rates improve slightly, but really nothing significant, not a lot of volatility. And gosh, if you look in the past, we just see this ton of volatility. Why? Because there's no data. There's nothing that the economists at the Federal Reserve, anybody has to determine how they're going to trade, what's happening with the federal data in the economy. So if there's nothing, people just kind of do nothing. Last week, the biggest news came out on Friday in the CPI, the Consumer Price Index report that shows inflation, basically how much consumers are paying. It actually was a little worse, but it didn't move the markets. Everybody's just kind of in this holding pattern until this government shutdown gets taken care of. So really, what are we looking at this week? The FOMC meeting, the Federal Reserve meetings this week. We're looking at geopolitics, and then the Treasury selling some debt. So let's talk about the Fed meeting. They start their meeting on Tuesday. They ended on Wednesday. After they ended on Wednesday, Jerome Powell, the Federal Reserve Chair, comes out and has a press conference. And we expect the Federal Reserve is going to cut the rate 0.25%. Now, all of that's already been baked into interest rates. And again, we haven't seen interest rates move in the last 3+ weeks. And we don't expect it to move when the Fed comes out and cuts the rate 0.25%. Now, the only thing that could change what happens with the market is if there's something unexpected. The Fed doesn't cut rates, or the Fed cut rates at 0.5%. Everybody just expects them to cut it 0.25%, even though they haven't had the jobs data, the federal jobs data that really is the main determining factor on what they're going to do. We did have some inflationary data, but it was parsed together. It really isn't as accurate as it could be. We just don't expect the Fed to make any drastic changes in their decisions. The data they are getting on jobs is private data, and that is showing some weakness in the jobs market. That's why the Fed is cutting, not because inflation's coming down, but because of a weakening economy and weaker job numbers, and the private data has shown some weakness. But again, we're not getting the federal data that would support that. So basically, we expect nothing to happen with rates because of what the Fed's going to do Friday, unless something comes out unexpected. Wednesday. Now, after Wednesday, Federal Reserve members will speak, and are we going to see some dissension in what they want to do moving forward? That really is the only thing coming out of this Fed meeting that could change what happens in the market. The next thing is geopolitics. So the government shutdown, right? We're in the 27th day. Boy, if you read stuff and pay attention to the news, nobody expects this to be over anytime soon. Democrats, Republicans, they're posturing. Who's going to blink first? Who's going to win the marketing battle or the battle with their constituents, and who's going to get the most pressure to cave first? That's kind of how they're looking at this. And short-term government shutdown is actually good for long bonds. And why do I say long bonds? Because mortgage-backed securities are longer mortgage-backed securities that are traded in the bond market. Those long bonds represent that. And short-term government shutdown is positive for mortgage rates, but long-term government shutdown, as this goes on for another 1, 2, 3 weeks, it actually is not going to be good for mortgage rates, because the fact that we're shut down and we're not paying employees, that starts to hamper our credit reputation. It increases the cost of borrowing. So as far as mortgage rates go and the mortgage market, we want this settled quickly. If this goes into another 2 or 3 weeks, it's going to not be great for mortgage rates. I don't know how much it's going to impact them. So that's something to pay attention to. What I'm basically advising my clients is let's just lock, right? We've seen a flat market. We don't see any major changes. And now that this is going into a longer term time frame, there's going to be more risk that rates will go up. And the other thing about geopolitics, not really talking about it, but there's been some peace agreements. As we know, the Trump administration has come up with some peace deals. This should be positive for world geopolitics, but we're really not getting a lot of attention to that because of what's happening with the government shutdown. There's been some trade deals going into place. That's positive for moving forward with bond traders, knowing what's happening as far as inflation and tariffs and everything. In China and the U.S., Trump's visiting China and this week, the end of this week, and there's a lot of expectations they're going to come out with a trade deal, and that is positive because we know what's moving forward. And bond traders, which is where mortgage-backed securities are traded, want certainty. Okay, so again, a lot of those trade deals and the peace talks aren't getting a lot of news because of what's happening with the government shutdown. And then some debt. The U.S. Treasury sells debt. It's all short-term notes, so it really isn't going to have much of an impact on mortgage rates. So what are we looking at this week? More of the same. Not much change unless the government shutdown's over, unless we see some unexpected news based on what I said, some surprises. You can see we're up 15 basis points today, so it's positive for rates. Have a great, productive week. If you know anybody can benefit from this video, please forward it to them. If you need assistance or help managing your mortgage, getting a second opinion, I'm not a paid public speaker. I do this as a benefit for my clients and my referral partners, but I'd also love to help you as a mortgage lender. All my information is in this email. Have a great, productive week, like I said, and I'll talk to you next week. Bye-bye.